Hello, Finxters, and welcome to part 5 of our beginner's guide to Forex trading bots and Python. And this will be the wrap up for our beginner series at this point. So let's take a look at what we're going to cover today. The first thing is avoiding the dip in your trading in Python career. This is a place that a lot of people get bogged down, quite frankly, and we're going to cover that and how to avoid that. And one of the ways to do that is to work on practical projects. There's a lot of projects available out there, but really a lot of them are not that great. So I'm going to give you a little heads up on some things you can do that are actually practical. And then we'll also talk at the end about what really makes currency values change. We can look at the charts, we can do the economic analysis, but at the end of the day, it's a certain type of thing that makes these values change. So we will cover that as well today. And as usual, before we get to the charts, let's go ahead and take a look at the disclaimer. Read that over, please. Once again, we're not doing any actual trading, or I'm not giving you trading advice per se as far as actual trades and trade recommendations, but you still need to go ahead and read over the disclaimer, and then we'll move to the charts. All right, so let's go ahead and take a look. This is the Euro USD again. Real quick before we get into some analysis here, when we talk about this dip, whenever we start something new, whatever it might be, Python or trading or anything else, the beginning is exciting. You're learning a bunch of new stuff. And, there's a book called The Dip by Seth Godin that's out there that's worth taking a look at. And he discusses, how people get caught in this, where it's kind of like the honeymoon is over and you don't know where to go from there. So Python really has the worst of these, really, and you see it all the time with beginners. You should get a really good foundation in the basics, and then you're not really sure what to do with it, where to go with it, and the solution to that is to dig into some practical projects, real life stuff that you can use, and that's really good with the combination of Python and Forex because there are so many places out there that you can get data to, download, bring it into your Python, clean it up, organize it, and start analyzing it to see, if you're finding any patterns or anything that can be useful in setting up long-term trade plans. And, especially if you're a freelancer, if you're Python freelancer, or, if you're Forex trading out of your home office, you don't have a boss there telling you, what to do every day, making it that's a little simpler actually to say just do this and that's what you do. When you're on your own freelancing, you have to go out and create these things yourself that can be useful, and there's many ways to do that. All governments, um, central banks, the World Bank, the IMF, there's just so much data out there available for free that we'll never cover a tiny percentage of it. So go out, get yourself some information, and you'd be working with your Python at the same time and start moving through to using your Python skills that you've developed to do real world projects that you can use or others that you can help others and use in whatever way it might be, whether it's data analysis or Forex or whatever it might be. So with the importance of projects covered already, then let's move over to the chart and take a look. Now this is really interesting because we talked a lot about the trap of trying to identify tops and bottoms. And we talked about this bottom on the Euro USD, which I'm sure that, a lot of people that are thinking about buying this with the changes in central bank policy and so forth. And we talked about the dangers of this. I saw a headline on that was dealing with Bitcoin, if we want to stay current with things. Um, and the headline was, "Is this another trap for bulls?" Something along those lines. And so the same thing's happening with Bitcoin. It's getting down in an area where people are wanting to buy, and it's just not happening at this time. So we talked about that before, about the timing not being right, and also the trading tactics not fitting the situation. Now we can see here on this Euro USD that we got down here. This green line is our annual S2 support 2. This is our central pivot, um, and you can see that it bounced a little bit and then it just blew right through. So anyone down in this area, this zone here, and I think if we go to a daily, let's check that. We had that double bottom, right? Okay, so now not only do they have the support pivot, they get a double bottom, and they're looking for up and back and long and gone is what they're thinking. Okay, they've got stops probably down below here. And I did see another one example of a trader that had done some analysis live, and he had this set up exactly like what it did. Okay, pull back and then down if you were a bear. And so that trade plan actually worked out pretty well. But it was also, once again, we talked about it. That was dangerous with this type of price action here at that support level. Uh, Shorting that again there is pretty dangerous. It's not a high probability type trade. Uh, Also, in a strong downtrend like this, trading against it uh, with the Euro USD or Bitcoin it is not a high probability trade. So you're really in a situation where, with this, honestly, or Bitcoin, might want to walk away and just wait. Let the instrument and the price action tell you when we're going to possibly reverse this whole situation. And there's no doubt that hindsight is 2020. But we've talked before about we want to try to predict the future. We want to know what's going to happen to the right on this chart if we can. And really, at this point right here on this particular chart, it can go either way. I'm not really too keen on things that can do either. That can happen anytime, but you'd be much better off with a different setup than you have here. So just something to keep in mind. And with all that said, let's go to a little bonus here that this is kind of a little bit higher level thinking, but I want to give it to you as a bonus at the end of this series. And that is that what is it that really makes these currencies change value? Okay. It's not the charts. It's not news releases. It's not economics. It can be at times, if a bomb goes off somewhere, that's going to make things change a little bit. But what happens in those extreme situations and what's happening right now as we speak is it really is all about global capital flows. The money has to move across borders for the value to change. People in Europe have to sell euros to buy US dollars or vice versa. And at this time, the capital flows, if you look, there's heat maps out there that you can find if you look hard enough. And the money is flowing out of Europe right now. Now, there's speculation, could that be because of the war in Ukraine escalating, whatever it might be. But for whatever reason, money is flowing out of Europe and going to the US and some other areas. And also, with that same thing in mind, there are a lot of people with these sanctions and stuff that are taking Russian companies that are taking their money and taking it home because they're being basically punished globally, which is a whole nother situation as far as what you think about that. But that's the situation. So money is moving basically out of Europe. It was also interesting that the Swiss National Bank raised their interest rate to zero. They had a negative interest rate for quite some time, which meant that if you put money into a Swiss bank, you had to pay them a certain percentage to keep it there. So you're losing money by doing that. Um, and Switzerland's always been known as a safe haven. And so when there's uncertainty and money wants to move there, it almost seems that would say, hey, listen, we're going to make this a little more reasonable for you. And so some of that money from other European countries may be going there. Just a theory of mine, but something to consider. So our key takeaways from this lesson really is get to work doing practical, real world projects with your Python, so you don't get bogged down in the basics. You can always stretch yourself out with these projects and then go back to the basics and tune that up if you're feeling a little overwhelmed. But get started with it and uh, make sure that you don't get into that dip where you don't get stuck, where you just don't know what to do. Don't let that happen. And always remember when you're looking with the Forex, when you're looking at charts and you're studying economics and whatever else you're using to make your decisions, that the ultimate reason that these things are going to change is basically, supply and demand. What currencies are being sold, what currencies are being bought. Uh, and that really is the 30,000-foot view that we talked about, I think, in the first lesson. Um, you got to pull out, look what's happening. Uh, it doesn't take a genius to figure out that if a certain country or region is having geopolitical problems, that people are not going to take their money and put it there. Um, so always keep that in mind. It's easy to get caught up in the charts, and you see these things. It would have been very, very easy to be buying this, and that would have been a losing proposition at this time. So don't get caught up, down in the trenches. Pull back out, take a good global look at what's happening, do your analysis, and have a complete strategy from the 30,000-foot view. And with that, I hope you enjoyed this little short series. I enjoyed doing it and sharing this information. And good luck and good trading in the future.